Hello and welcome to the show. I'm your host, Hazel Declue, the Wealth Whisperer, and today I'm delighted to be talking with you about the subject of how to manage your money. Now, I think this is one of the most important subjects with regards to how to make best use of your finances and how to get a grip on where you're at right now and where you can make improvements. I think it's just super important to understand these basic aspects. Now, you may well have heard some of the ideas that I will share in this episode, but I can guarantee you that there will be other elements that you won't have heard before necessarily, and they will really go to helping you to understand where you're at currently and how you can make improvements to your situation. And then right at the end, I'm going to be sharing with you a nice little surprise, a nice little gift that I'm going to give to you to really help you with this idea. So without further ado, let's get going and talking about managing finances. Now, for me, it doesn't really matter whether you have loads of money coming in or much less money coming in. What matters most is what you're doing with it. I've worked with hundreds of clients now over the years, and I can tell you that some of the clients I've had who have had the most money coming in terms of their earnings have had the least amount of savings and the least clue as to what their financial life really looks like. Interestingly enough, it's quite fascinating. It always fascinates me. And some people that I've worked with who have had much less income have had a good grip of where their money's coming from, where it's going to. They may well have bought themselves a property, and then they're able to leverage that property to be able to go on and do further things. So it doesn't necessarily mean that if you don't have a six-figure salary, that you're not going to become financially successful. That is a myth. Absolutely. For example, myself and my husband, we started off with absolutely nothing. And I mean, well, okay, I say nothing. I probably had a couple of £100 in savings, and so did my husband at the time. Obviously, boyfriend then. We've been together a long time, and we started from the ground up. We started with nothing, and we took small, steady steps to save and then to build our life and our wealth situation. So that's really interesting that it doesn't necessarily take an awful lot of income to make a difference in your life. So let's talk about what you're going to need to do in terms of managing your money. Well, the first thing, and it's interesting that most people know and really have a good grip on how much money is actually coming in every month to their bank accounts. It may well be that they have a salary and they know exactly, almost to the penny, how much money that is coming in, minus taxes, etc., into their bank account, and it hits their account and they think, right, I've got that much money, and they therefore then can run their lives from there. Some people have a better grip on budgeting, which is most likely to be in a whole other episode at some point. They can budget their money quite well, and they know, what they need in terms of being able to live and function every month, and they know how much may or may not be left at the end of each month. But interestingly, the vast majority, and even those who have got a good grip on how much money they've got to work with and what they're doing with their money, the vast majority don't necessarily know how much money is going out each month. And there are various reasons for this. Sometimes it's because you have money going out in big chunks rather than on a monthly basis. Sometimes those monthly expenses change and vary, and it's perhaps harder to keep a track of, let's say. So that's where people end up with problems, because they see the money coming in and then they, spend money out on their necessities and their bills and rent and mortgage, or going out and etc. But actually at the end of the month they wonder where on earth it's all gone, right? So the most important thing actually is to get a grip on where your money's going. Where is it all heading off to each month? So I would absolutely urge you to understand not just your income, but your expenses particularly. And a really good way to do this is to itemize all the regular outgoings that you have each month, and on a yearly basis, things like insurance or holidays, things which are, a sort of bigger expense in one chunk. Maybe break those down to a monthly cost. And so you've got an idea of how much that typically costs you each month. And then the next step is to see how much cash flow you have when you take off all your expenses from your income. Now, the income is essentially whatever money is coming in to your household. That could be from a job, it could be from your own business, it could be from dividends that you receive, or interest in an account, or any other income that you have coming in on a regular basis. Okay, so count all those things as income and then list all the outgoings that you have, and they are your expenses. Okay, the next thing you need to do is make a note of all your assets. Okay, now your assets, most people understand the context of an asset as something which is worth something. So you could say your own house is an asset because you have hopefully got quite a decent amount of equity in that house. You could say that your car is an asset because it's worth something. Okay, so basically anything that is worth something is, you may class as an asset. You might have jewelry, you might have an antique, you might have paintings, you might have cash in the bank, you might have a pension, you could have other insurance policies that pay you out. I mean, there are myriad things that you can classify as assets, including investment properties, stocks and shares, cryptocurrencies, all sorts of things. Okay. Then you have liabilities. Okay. And the liabilities are those things which basically take money out of your pocket each month. So that would be a mortgage on your own home. It could be a car payment. It could be credit card bills, all those types of things, school fees, I don't know, all sorts of things. So in the traditional sense, this is typically how people see assets and liabilities. So I'm going to break it down to something even simpler, in that an asset is something that puts money in to your pocket. And a liability is something that takes money out of your pocket. So when you look at it like this, you could think to yourself, well, hang on a minute, I may well have equity in my home, but actually that home costs me money, right? Every month you're going to have, if you own your own home, you're going to have a mortgage to pay, unless you're in the comfortable position, excuse me, of being unencumbered and not having any mortgage liability on that property. However, you still have bills to pay, right? You still have maintenance. So you do still have liabilities going on in relation to that property. So I'd like to kind of argue the case that actually an asset, really, in its really truest sense, is something that absolutely brings money into your pocket. That is why we have focused on buying property over the years for investment purposes. We've bought properties which have brought money into our pockets rather than taking it out of our pockets. On the vast majority of occasions, I will share one or two examples of ones which did not go so well, but that's all part of the learning, right? So yes, investment properties bring money into your pocket. If you have money in an account, a high interest account, that will be paying you an interest payment every month or every year, depending on how often you get that payment. You could have stocks and shares which pay you a dividend. You could have written a book, or you could have written a song, and the royalties from that could be coming in. So that's money coming into your pocket. So these types of investments, types of places that you put your money, where money comes into your pocket, are the true assets. Okay, so I just want you to understand the distinction between like an old way of thinking about assets and a new way of thinking about assets. Okay, so that's an interesting one, right? So you'd make a list. Now, I'm not saying that you can't count your house or your car or whatever else you've got that does take money out of your pocket each month. I'm not saying you can't count it as an asset, but just understand the distinction between the two types of assets. So you'd make a list of all your assets as well and how much they're worth without any liabilities against them. So your home without the mortgage amount against it, for example. And then you would make a list of all your liabilities. So you'd make a list of the mortgage, and you'd make a list of car loans or credit cards or store cards or anything else that's basically taking money out of your pocket every month. All right. Sorry, not every month, but it is the amount of money that you have that's a liability against the asset. Okay, because you've also had your outgoings already. So you turn this into a sheet so that you can actually see, and you can get basically a snapshot of where you're at, financially speaking. And once you get a snapshot of where you are, you can understand better the money flow coming in, going out, where it's building, where it's reducing. So you could do this exercise every 3 to 6 months so that you get a bit of a snapshot of where you're at, financially speaking, and whether your net worth is growing or ebbing away, whether your income is improving, or how much your cash flow is, etc., so that you've got much better idea and understanding of what's going on. And I will tell you something: if you do this exercise, something amazing happens. I can't explain why, but because you are now taking control, taking responsibility, understanding the money flow, seeing where it's coming in, where it's going out, how you're building, how it's dying away, whatever, something amazing happens. I call it the magic happens. And all of a sudden, you seem to have more money coming in. You seem to be accumulating more money just by the very nature of the fact that you're managing it better. I cannot explain it, and I don't know how it works, but I think it's just because when you put your focus, energy, and attention onto it, it does make a massive difference in terms of the outcome that you will see when you do this exercise. Now, I'm going to make life a little bit easier for you. I'm going to say that if you click on the link on this page, that there is a free tool that we're giving away. And it is our financial spreadsheet. And all I can say is it's brilliant, even though I say that myself. My husband and I have put this spreadsheet together. We've tweaked it, changed it, put it together over the years, and made it a fantastic tool that we would love to share with you, so that you can basically put all your data in, all your expenses and income and assets and liabilities, and it will basically break down exactly what's going on for you. And it will also tell you at the end certain interesting other information about how much money you're spending on your home, and how much, how close you are to financial independence, which is super handy when you're actually working this path towards financial freedom and wealth for yourself. So we'd love to give that to you. It's worth £97. And we've used this tool with lots and lots and lots of our clients who find it absolutely brilliant to understand exactly where they're at. So if you'd like to go ahead and grab a copy of that, make sure you fill it in. It doesn't take that long. If you don't know certain things, take a best guess, or go back into your bank statements or some of your files and find some of the information out. It is absolutely worth it. Okay, so definitely head on to the link on this page, get your copy of our financial spreadsheet, and have a go at it. And I'll see you on the other side, perhaps on another episode, to sort of work out what to do next. Take care till then. Have fun.